Welcome to the module on budgetary control. In this module, we are going to learn the following topics: Introduction to budgets and budgetary control, objectives of budgetary control, classification of budgets, and zero-based budgeting. What are budgets? Budgets are plans of action for future periods and involve setting targets. Budget is a plan expressed in quantitative terms for a specific period, usually 1 year. But budgets are also prepared for shorter durations like a month, fortnight, or even a week. Once budgets are prepared for a period, at the end of the period or even at regular intervals, the actual performance is compared with the targets, which is a budgeted performance level, and corrective action or remedial measures are taken wherever required. The process of preparing budgets is known as budgeting. What is budgetary control? The exercise of control in an organization through the help of budgets is known as budgetary control. Budgetary control is one of the most important cost control techniques. Budgetary control means the establishment of the budgets relating to the responsibilities of the managers and continuous comparison of actual performance with budgets to check progress made. Remedial action is taken whenever necessary to get the performance back on track. So, why is budgetary control important for organizations? Well, budgetary control forces the management to set out detailed goals for future. It serves as a means of communicating critical information about the strategic plan of the organization within the organization to the key stakeholders. Budgetary control helps in coordinating activities of various departments towards achieving a common goal. Budgetary control helps measure success vis-a-vis the targets. It also clearly identifies areas of responsibility. What are the essentials for budgetary control to be really effective? It is important to first establish budget for each department and each activity within the organization. Budgetary control should clearly identify responsibility for the managers, that is, the specific tasks that the managers need to carry out in order to achieve the targets. There has to be continuous comparison of actual performance with the budgets. Remedial measures have to be taken to achieve desired objectives whenever the management feels that the performance is lagging or not as per the targets planned. Revision of budgets is also required whenever the business environment changes. Before we start discussing about the different types of budgets, let's first understand a critical component of budgetary control. This is a concept of limiting factor. When budgets are prepared, there is one factor that limits the quantity of goods or products that can be manufactured or sold. This factor is known as the limiting factor. Limiting factor for most organizations could be customer demand, meaning the number of units that can be sold to potential customers. Customer demand in turn is influenced by factors such as selling price, competition, purchasing power of the customers, etc. Or the limiting factor could also be related to production, such as the plant capacity, the number of units that can be manufactured within a given period. So, the limiting factor must always be considered first while preparing budgets in order to ensure that the budgets prepared are realistic and achievable. For example, if the customer demand for a product is 20,000 units in a year, there is no point in preparing a sales budget for 30,000 units or a production budget for 30,000 units, because these budgets would be completely unrealistic and never be achieved. However, sometimes it's actually possible to eliminate the limiting factor. For example, if the plant capacity is the limiting factor, the company can actually invest in a new plant and enhance the production capacity. Budgets can be broadly classified into three categories. They can be classified according to function, they can be classified according to time, they can also be classified according to flexibility. So, what do we mean by classification of budgets according to functions? Budgets that are classified according to functions are known as functional budgets. These budgets are prepared for each and every function in a company. There is at least one budget prepared for each function in a company. The number of such budgets prepared will of course depend on the nature of the business and the size of the business. So, what are some of the important functional budgets prepared? First budget is obviously the sales budget. This budget provides the prediction of total revenue for the next year, and it shows the quantities of goods or products that have to be sold, the selling price of these products and the total sales expected from each product category. The second budget is what is known as production budget. This production budget is based on the sales budget. This budget lays out the production schedule that the company has to follow in order to achieve the sales target. It provides an estimate of the total number of units to be manufactured every month to ensure that there are sufficient units available for selling. The third type of budget is what is known as the direct materials budget. This budget indicates the exact amount of direct materials required to manufacture the finished goods. Remember, this budget has to be in sync with the production budget. This budget specifies the cost of direct materials that have to be purchased and used during the budget period. The next category is what is known as direct labor budget. This budget specifies the direct labor requirement in terms of number of labor hours that the workers have to work during the budget period, labor mix, how many skilled workers, how many unskilled workers, how many semi-skilled workers would the company need to hire during the budget period, and of course the total labor cost that is expected to be incurred. This budget also needs to be in sync with the production budget. The next budget is what is known as overhead budget. Separate budgets are prepared for each overhead expense incurred by the company. So, there would be a separate budget for factory overheads, a budget for general and administration overheads, and a different budget for selling and distribution overheads. The next budget, which is an extremely critical budget, is what is known as cash budget. This budget provides a summary of cash inflows and cash outflows expected during the budget period. The objective of preparing this budget is to ensure that sufficient cash is available at all times to meet the operational needs of the company. A cash budget helps in determining cash needs. It also helps in planning for financing these needs and in ensuring that sufficient control is exercised over cash outflows. Capital expenditure budget is prepared to provide guidance for capital investments required during the budget period. Sometimes separate budgets are actually prepared for different categories of capital expenditure. For example, you might have a capex budget exclusively for buildings. There could be another budget for investment in plant and equipment. There could also be a separate budget for furniture and fittings related investments planned during the budget period.